Now, this topic from Robert Kiyosaki, Increase Our Financial IQ. The topic is more leverage and higher return. So I'll be sharing with you the lessons I learned from this topic. First lesson is that the reason leverage is so important is because the higher the leverage, the higher the return. Again, the higher the leverage, the higher the return. Number two, example. If I buy a $100,000 rental unit, all in cash, and I receive a $10,000 a year net income, so this is net income. There's a difference between gross and a net income. So gross income, you have all the incomes, but you have not taken into account expenses, mortgages, your principal and interest, your property taxes, the repairs and maintenance. So that's the gross. The net is after you deducted all the expenses, after paying the principal and interest, after paying the expenses, the property taxes, then the leftover is called net income. So if I receive, in this particular situation, a $10,000 a year net income, then my cash on cash return is 10%. How did we come to get the 10%? So we said that the net income, net, okay, that is all after expenses, taxes, mortgage have been taken down, paid off, we are left with 10,000. And my purchase price of a cash property is 100,000. So 10,000 divided by 100,000 will give us 0.1. Now, because we need to come up to a percentage, right, we have to multiply it by 100. So 0.1 times 100 will give us a 10%. So that's what is called 10% cash on cash return, or ROI, return of investment. Second example, if I borrow $50,000, this is where the leverage comes in. Leverage is when not all of my money is coming from my own pocket. I use the bank, I use my friends, I use somebody else. So let's say I borrow from the bank. I borrow $50,000 and I am still able to receive a 10,000 net, okay, net income per year. Then my cash on cash return is, so again, the net income is 10,000. Now we divide it by 50,000. Why would you would ask me, why would we divide it by 50,000, Ria? Why not 100,000? Remember, the 100,000 was cash. Now, because we leveraged, we borrowed money. This is our own money now. 50,000, we borrowed 50,000, right? It's not all cash. So 10,000 divided by 50,000, we will get to 0.2. We have to multiply it by 100 because we want to come up with a percentage. So 0.2 times 100 will give us a 20%. So this 20% is the cash on cash return of investment. Now, third example, if I finance or borrow the entire, all of it, 100,000, and I'm still able to receive a 10,000 net income per year. So the cash on cash return is, do you know the symbol? This is called infinity symbol. Infinity, why? Because I do not have money. I do not have my own money. I borrowed that $100,000. So when it is none of my money, when I leverage, when I borrow, when I finance all of it 100%, then the cash on cash return is infinite. This is the sign of infinite return. because now you're receiving the money, you're receiving the net income, and you have no money into the property. So that again here, the net income is 10,000 divided by 100,000 of leverage or borrowed money. Then this is what we get. Infinite return. Infinite. Infinite means I have zero money, zero of my own money. Own, O-W-N, own. That's why it's called infinite return. Infinite return means the money is for nothing. Why? Because it did not come from you, from your own pocket. 10,000 of the net income flows into your bank, flows into your own pocket, and nothing comes out. The renters cover all the expenses, and I get to receive all the income, the net income, 100%. So infinity is there is no real number larger than infinity. You would ask me, hey, Ria, is 1 million bigger than infinity? Is 1 trillion bigger than infinity? No real number larger than infinity. Infinity is way bigger. There is no real number larger than infinity. Another example of infinite return. When you take, see the example of another infinite return, okay? When you take equity loan from another property you have, that is one example of infinite return. And why do I have this book? Why? Because I've done a lot of this infinite return. In my book, Apartment Prescription, I talk about the 50 apartment units. And if you read my book, go, and if you do not have it, then go get one. If you read my book, it's all the way closer to the end, where I shared with you my 50 units and how I bought this 50 units. So how I bought it is I was taking the equity, an equity loan, it's called a line of credit, from another property of mine. And that's why how I was buying from one property to another. And so when I use the equity to purchase another property, that gives me infinite return. Infinite means there is no real number larger than infinity. So isn't that awesome? This is one great lesson that I can share with you. Second, so grab my book, Apartment Prescription. Second, no money down investment. This is again an example of infinite return. No money down. They do exist. So for example, you borrow money, 80% from the bank. The 20% now could be coming from your family, your rich uncles, your rich mom and dad, your rich aunts, your rich grandparents. You can borrow from them. But when you borrow, you make sure that you have to pay them. So why? Because then you could continue to borrow, right? You have to pay them at some point in time. 20% is coming from the hard money lenders. They are called, I call them sharks, because why? Their interest is very high. And 20% could be coming from the sellers. It's called owner's financing. So now none of the money is coming from you. That 20% is coming from your family, from hard money lenders or sellers. So that's the no money down investment. Now, more exercises on this return of investment. Why am I stressing this? Because I want you to make more money when you go invest into a property, or when you go invest into any other forms of investment. Because why? The principle is the same. There's a thing called COC, or cash on cash return, or ROI, or return of your investment. So more examples here. 100% ROI, or return of investment. So let's say you invest $100 of your own money, okay? And you make a profit, a net profit of $100. Now, how did we get to 100% ROI, or return of our money? This is the formula. The formula is $100 of our net profit divided by the $100 of the money that we invested, That 100 divided by 100 will give us 1. We have to multiply it to 100 by 100 to get to a percentage. So 1 times 100 will give us 100% ROI, or return of our investment. Second example, at 200% return. Again, we invest $100 and we get a net profit of $200. So the net profit is 200. We divide it by 100, the money that we invested. So 2 times 100. Why do we have to multiply it? To get to a percentage. So this is 200% ROI. Now let's make things more difficult. A 600% ROI. And yes, it is possible. Remember, infinite is even greater. There's no real number larger than infinite. So if infinity is true, 600% is also true. 600% ROI. So let's say you have a business online, okay? Now, your business makes an average of 2,000 from each customer. And your business online, right, you have to pay, you have to have advertisement. Why? Because if people do not know you, they cannot flow you, they cannot purchase from you. So you have to pay for ads, advertisement, to get your business known out there. So let's say you paid $1,000 for that business ad. Now, if I convert only 3% of these new leads to the customers, so your leads becomes customers, customers which are paying you money now, let that 2,000. So for example, you have 100 leads and 3% is 3 customers. Those 3 customers pay you $2,000 each. Now your return is 6,000. So 6,000 divided by the 1,000 that you spent, right? You spent for business advertisement so that people know you, so that people could buy from you. So 6,000 divided by the 1,000 will give you a number of 6. And we have to multiply it by 100 to get to a percentage. So 6 times 100 is 600% return of your money. Now, let's make it even harder. Another example, a 400% return of investment. So let's say you have a company and you spend $10,000 in new advertisement. You have to spend ads so people know you. And because you spent money on advertisement, that resulted to 50,000 of sales, new sales. Now, the return of investment on a sales basis, now this is not the net profit because you do have, you know, your building costs, your employee costs. This is just on a sales basis. So this computation is a little bit more harder. Now, 50,000, if we remember, 50,000 is the new sales that we got. Why do we have to subtract it to 10,000 by 10,000? Because we spent 10,000 on the new ads. So 50,000 minus the 10,000 that we spent for new ads, that would lead us to 40,000. So 40,000 divided by the 10,000 that we spent from our own money, right? We have to pay people to make us ads. So 40,000 divided by 100, 10,000 will give us a number of 4. And we have to multiply it by 100 to get to a percentage. So 4 times 100 will give us a 400% return of investment. So I hope you learned something. These are some of the computations that I gave an example to you. We've discussed about, getting a 100% return of investment, 200% return, 400%, 600% return from a property to having your own business online, right? And we also discussed about the way of getting the infinite return. So let me know a key takeaway. One key